Hello and welcome to another episode of Speaking at Real Estate. My name is Carlos. I'm the level 4 realtor. And today I have another special guest, an old friend of mine. We go way back, and it's good to see that we have now merged into the real estate industry. He is the president of Streamline Financial Group. This is my friend, Mr. Steve Shalaby. Steve, how you doing, sir?
Hey, Carlos. Good, man. Thanks for having me on the show.
Man, we age like fine wine, don't we?
Well, I think you're Asian better than I am.
I wouldn't say that. That's too modest of you. That's too modest of you. Okay, Steve. For everybody that's watching, go ahead and tell us exactly what you do, your title.
Well, I am the founder and the president of Streamline Financial Group. We're a Florida-based mortgage company here in Boynton Beach, servicing the entire state of Florida. And we offer a number of different loan products to help Florida homeowners buy, refinance, invest in real estate.
Excellent. I love having mortgage lenders on my show. I feel that you guys are a wealth of knowledge, and especially for me. I mean, I know I'm a realtor, but that doesn't mean I know all the ins and outs on your end of it. And it's always good to have you, and it's always good to have people in your industry to provide information for people who are seeking options on trying to get a property. I looked at some of the services, and there are some of them that raise my eyebrow because I'm curious about them. And now that tax season is coming up, I'm getting my taxes done. You are too. And I worked in the public sector for many, 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 many years, and now I'm private. And the whole tax thing is brand new to me. But it isn't just taxes where I'm affected. I've considered maybe getting an extra property, and I no longer have W-2s. I'm like the private guy, and it seems like the rules for getting a loan now have drastically changed. So what is out there for me? How can I continue to get a property? What's the easiest way? What's the best way? What do you have for us?
Well, I'm glad you bring up the subject, Carlos, because this conversation that we're going to have today is very near and dear to my heart. Because, like you said, many of us are self-employed, and you could have a great credit report, but as far as Fannie Mae is concerned, if you have a creative accountant that diminishes income or reports some expenses, and by the time your adjusted gross income is factored into the deal, there's not much there to work with. And that's the case with, I want to say, 90% of self-employed people that I've dealt with in my life. So how do you address this as a lender? How do you help self-employed people who are wonderful credit risks? These people obviously pay their bills on time by looking at their credit report, but they have creative accounting practices. So lenders a few years ago came up with a whole different umbrella, if you will, a different classification of loans called non-QM. Non-QM just means non-qualified mortgage. These are an array of mortgage products that don't have to be sold to Fannie Mae or Freddie Mac. So that's why they call them non-qualified. They don't have to conform to the guidelines, so they don't have to be sold to Fannie Mae. They're held by the lender that offers them. So we've got several different types of loans that we can offer self-employed people. Some of the different things that we offer is, let's say you are let's say you're a 1099 employee. You might be, a salesman of some sort, selling medical equipment or cars or whatever you sell. Most salespeople receive a 1099. Well, by the time you do your taxes, whether you file a Schedule C under your personal taxes, or whether you're incorporated and you file an 1120S tax return, doesn't matter which way you file, you're going to report some expenses, right? So you drive, so you're going to report mileage. You have expenses that are associated with your business. So by the time you show your adjusted gross income at the very end, it's very small. So how about if we found a way to lend to you just by looking at your 1099? So your gross amount, what you reported, without backing out any expenses, and we'll make a loan to you to buy the house.
That sounds heavenly. Because I know when it came down to getting a loan before, you would just check credit score, check salary, payment history, things like that. So is it any different now? Like, what are the key factors? If I come to you now as a realtor, Steve, I want a loan, I want to buy a $300,000 property, whatever. What are the main things now when you try to get a non-QM?
Very good question. So you still have to have credit. Your credit's going to have to be decent. Generally speaking, I need you at a 680 credit score or better. And that opens up the door to an array of different loan products. So we talked about the 1099 loan. That's just one type of loan. How about a bank statement loan? A bank statement loan basically allows you to forego the tax returns, the pay stubs, the W-2s. I don't look at any of that. You just show me 12 months of bank statements. Or if you can show me 24 months, you get an even better interest rate. So if you can show bank statements, what we'll do is we'll add up all of your deposits over the past 12 or 24 months. Let's say you deposited $500,000. We're going to back out some expenses because every business has expenses, but we're just not going to look at it the same way your accountant looks at it. We're going to back out 50% for expenses. So if you deposited $500,000, guess what? Your income, as far as we're concerned, is now $250,000. That opens up a lot of doors for you. There's not a lot of houses that you won't qualify for if you show $250,000 a month, a year in income. So the bank statement program, the 1099 program, there's a couple of other different ones. Just one called the P&L only program, where we only look at the P&Ls created by your accountant. We consider those, they don't even have to be audited P&Ls, just any old P&L that's on his letterhead. Your profit and loss statement will accept that. There's a lot of different ways to help self-employed people. And we haven't even started talking about the loans available to investors yet. This is just for self-employed people. Just have a decent credit report, and that's really it. So the moral of the story is do not assume that you don't qualify. Speak to somebody, tell them your scenario, and you might be surprised.
I'm actually glad you mentioned that because I was thinking, okay, most people they probably just want to buy a property, buy their primary residence, things like that. I know in the conventional side of things, you have first time home buyers, you have investors, you have people who they want to buy a property for rental income, and there's different options to them to, I guess, manipulate the interest rate or the loan itself to benefit how we're going to pay for the property. So, for example, I want to buy a fixer upper. I don't necessarily need a 30-year loan, but I need something that will get me in low and get me out in 5 years. That kind of structural stuff in the conventional side. Are there options like that, different types of options like that for non-QMs?
I'm glad you asked that question, Carlos, because not just are there options in the world of non-QM lending. When I tell you the options in non-QM lending for investors are orders of magnitude beyond what any conventional loan can ever do for you. Orders of magnitude. Why? Because in the non-QM world, we understand that the scenario you just mentioned, a fix and flip type of loan, this is not a loan that's easily underwritable through Fannie Mae's conventional loan guidelines. Fannie Mae sets the guidelines for how a lender is going to verify income, what documents they use, how far back they have to go, how they document assets, what assets are required. There's minimum assets required. So it's a very tight framework of guidelines that you have to stay inside the guardrails. But with non-QM, it's like the wild west. We can think outside of the box. We can look at things in a different way. So let's talk about your scenario. You're an investor. You want to buy a fix and flip loan. A fix and flip loan I could do for investors. Remember, you can't occupy it as your primary residence. So the purpose of the purchase must be investment. How about you come in with 10% down and we'll finance 100% of the renovations, as long as the after repair value, or what we call the ARV, is at 75% LTV or better. You may recall LTV stands for loan to value, and it's just a ratio where you express the loan versus the value of the house. So if you got a loan of 100,000 and the house is worth 200,000, well, that's a 50% LTV loan. So as long as the after repair value, after you add your roof and your kitchens and your bathrooms, that after repair value is 75% or lower, we're done. It's a slam dunk deal. You only have to come in with 10% down. Where else you can't even do that in the world of conventional financing.
So I like the sound of that kind of flexibility. That looks like so I'm glad to have heard all this. To be honest, it seems like even though I personally, I'm speaking for myself now, coming out of 20 years of public sector work, I've been pretty mortified by this process now as a consumer because I'm like, well, how do I do this? I mean, my salary's erratic. It's like, yeah, we'll get 5 closings in 2 months, and then you get nothing for like 5 months. How are banks going to treat this, and how am I going to work this through? The wife and I eventually want to get some investment properties. Hearing what you've said has provided me with a sigh of relief, and I'm glad to see that there are these kind of options out there. And so, to our audience, I say, hey, if you ever need any kind of financial assistance with the property, especially if you are a 1099 worker or a salesperson and you need some different kind of entry to get in, please reach out to my buddy Steve at Streamline Financial Group. He will be more than happy to help you. I'm going to have Steve's contact information down in the description so you can reach out to him if you have any questions or if you're looking for some kind of approval to get a loan. So, Steve, listen, this has been a extremely valuable lesson and conversation I've had with you. And as always, man, it's great to see you, and it's great to see that you and I are still churning along in life here since high school, man. Any final thoughts before we go?
Carlos, I can't really add any more than what you've already said. The world of non-QM lending is something that more people need to know about. Self-employed people, I don't care if you don't employ anyone or if you employ 500 people, chances are you're going to benefit from a non-QM loan. And we haven't even talked about the different other options. There's 2 or 3 other options for other investors that can help you grow a portfolio. Many people have an eye to have 10 or 15 or 20 properties, built over a lifetime. Well, how do you do that if if the bank keeps looking at your taxes and your income and the expenses for each of those properties? We have ways to get around all of that as well. All we say is ask, and we'll find a way to get it done for you.
Excellent, excellent. All right. Well, I'd like to thank you for spending another episode with me and my friend Steve here at Speaking at Real Estate. We will see you again soon. Again, I will have both my contact information and Steve's down in the description. Please hit the like button and please subscribe to my channel as I try to provide you with any news from the real estate world or any information from the players in the real estate industry that will help you make a decision with the acquisition of your next property. Thank you very much.
Thanks, Carlos.